Hey, what's up everyone? I hope you guys are all doing great out there. So you probably saw the thumbnail and the title of the video and were wondering how you can make some consistent weekly income. So in this video, I'm going to show you exactly that and go through step by step. Before I do, just want to ask you guys, go ahead and give this video a like and subscribe to the channel. Also want to let you know that I am not an investment or financial advisor and these videos are for entertainment purposes only. Alright, so as you can see, the stock I have pulled up is NIO. NIO is a Chinese automobile manufacturer that specializes in EV electronic vehicles. So as you can see, the stock completely skyrocketed in the past year. It was at basically, a few dollars, $1 and $2, and it's right now at $30, a little over 30. So I see it having a more of a positive outlook in the next year or so as EV becomes more and more of a thing and kind of just normalizes how people drive on a daily basis. So I really think the stock has a lot of potential growth. I'm going to show you exactly why that's important. So before we actually get into the trade, you want to remember two things. One, you want to choose a growth stock, right? So we talked about NEO. And also a stock you wouldn't mind owning 100 shares. So me personally, I would not mind owning 100 shares of NEO. And also you want to have enough cash. So if you are required or assigned 100 shares of NEO, you have those funds available, right? So those two things you want to keep in mind. All right. So for this strategy, first thing you want to do is click on trade options. All right. So we're going to be making money off of the premiums. So before I talk about that, you want to choose the expiration date. As you can see, I have expiration date 1 week out, November 6th. And next you want to go ahead and click on sell put. All right, so you sell a put. And the next thing you want to do is choose a price that you think the stock may stay above, right? And that has a good premium. So what I mean by that is current share price is currently $30.74. So in a week, I'm thinking the stock price is going to stay above $30, right? Boom, right there. You want to click on that. As you can see, the premium is 1.51. So that is equal to 1.51 times 100 is $151. So you want to hit continue, and then you want to enter one contract in the contracts text box, and then you want to go ahead and enter 1.51. Okay, so that basically means you're going to get $151 if NEO stays above $30 at expiration, right? So in a week, if NEO is $30.05, you get your $150, and you don't have to worry about purchasing 100 shares, right? So that's the first scenario, and that's the simplest scenario. All right, so let's talk about the second scenario that can go down. So um, let's say by expiration, NEO finishes below your strike price, right? So it finishes at $29. So what happens in that scenario? Remember we talked about you need to have enough funds to purchase NEO at $30. So what I mean by that is if you click on review order, you'll see a cash collateral of 3,000 that's required, right, before you enter into the play. So that's basically if NEO finishes below $30, you're required to purchase 100 shares, right? So I'll let you know why that's not the worst case, because first you still get to keep your 151 premium. So you get that money regardless, right? And the second is, let's say it does finish at $29 on November 6th. NEO, as we saw, it's a pretty good stock, right? Like it has really good uptrend this past year. I wouldn't mind holding on to 100 shares at $29 or whatever price, even $28, because I know it's probably going to pop right back up, and then I can go ahead and sell it back for 31 and profit off of that as well. So, guys, this in my opinion is one of the safest strategies, but again, you have to remember the two things that we talked about. You have to remember that you have to choose a growth stock. You have to choose a stock that you would not mind owning 100 shares, right? So I'll go ahead and highlight that so you guys, so really want to emphasize on that, because if you do that and if you pick the right stock, it's a win-win both ways, right? So you get your $151, and let's say it does drop, you go ahead and wait for it to pop back up and you go ahead and sell it. Or like I said, scenario one, it stays above $30, right? And you go ahead and do this on a weekly basis, and you go ahead and make, essentially you could make $150 every week, right? So this is one of my favorite strategies because it's one of the safest strategies. So that's NEO, and you can see it requires a $3,000 collateral. Now that may seem like a lot of money, but it's really not when you think about the return that you're getting, right? And the risk and the reward. And again, you don't have to choose the strike price right below the share price, right? So if you really want to be careful, you can go ahead and choose 29. You'll get a little lower premium, but it's on the safer side. So you go ahead and put 109 or 106, right? And you can make, a little over $100 every week, right? And also in this case, your collateral drops by $100. So this, in my opinion, is one of the safest strategies. Like I said, I do it on a weekly basis. It's better than just buying calls and buying puts. Those are extremely dangerous, in my opinion, especially in the volatile market. So that wraps it up. We went over exactly how you can make weekly consistent income by selling puts. Really hope you guys enjoyed the video. Definitely want to know in the comment section below if you guys are going to be using this or not, or if you already use it, and what other option strategies or stock strategies overall you guys like, what stocks you guys like. Just go ahead and let me know in the comment section below. Make sure to like the video and hit the subscribe button. Other than that, thanks for watching.